Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 17th, 2023. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes, your shares, your comments is what going, so please don't forget to do those actions. Risk on assets such as stocks and high yield bonds are at critical level. I will discuss what that means. Interest rates are coming down as predicted. We will watch them into the future. Gold is surging and is now approaching all-time record highs. This could be, well, very bullish for gold, obviously. And we'll try to figure out if natural gas has indeed stopped falling. If you are a subscriber, stay tuned. We will cover all of these various securities in the members only video. You can see there is a lot: crude oil, many of the forex instruments, Bitcoin, many of the ETFs, technology ETFs, worldwide ETFs, many of the large cap stocks like Cisco, Pepsi, Walmart, and some of the speculative ones like C3AI, Alibaba, and a few of the gold related ones as well, like Hecla Mining and Royal Gold. Okay, let's get to it. We will try to cover as much as possible. S&P 500. This is S&P 500 on daily time frame. So daily means right here. It means 1 day worth of activity for each candlesticks. On this chart, you can see that we have green, blue, red, and yellow lines. This is my proprietary MasterChartsTrading.com price action indicators. You can find out more to the link in the description. And right now, we can see that the price has kind of dropped on right here on Thursday, the 9th of March last week. The price has dropped below this red support resistance line, this horizontal line where I'm hovering. The line is currently at 39.48 for S&P 500, and so far it hasn't decisively broken below it. Notice before, for example, here in November, we had similar incidences when we had price coming down below this red support resistance line, but there was no follow through really to the downside. Finally, we had a surge, and on 2nd of February of this year, 2023, we had a rally towards this blue support resistance line. So far, we haven't been able to break above it. However, if we look at ETF SPY, which has dividends added into this price equation, you can see that we did indeed break out on 2nd of February right there above this blue support resistance line. So depending on how you look at it, we can say that either we are indeed in a new bull market because we closed above this blue support resistance line, or we're not yet above this we're not yet in a new bull market. So either way, we need to just kind of watch the price action, and right now it's not great, tell you that much. So if we look at a weekly chart, so this is a weekly chart of S&P 500. Weekly only means one thing. Weekly just means that each candlestick is a whole week worth of activity. Where I'm hovering says 1 week. So notice what's happening right now. Last week we had a, where I'm hovering right now, close below this red support resistance line on a weekly basis. This week we just see we now see a close above this red support resistance line, but this candlestick for this week is kind of not really very, I don't know, I guess the word convincing. We barely were able to close above it. So we're still technically at this critical level. This red line is, it's quite important for it to hold, because if it doesn't hold here, then we can get a trip down towards this yellow line, which is currently at 3691. another let me see, another 6% down. Not a lot for stocks. If that happens, then we are uh, gonna most likely break to new lows. um, so it's important again that we hold this level, currently at 3925. This level is uh, or 3925 is the level that we should be holding. We'll see what happens. um, Looking at Dow Jones, same general principle, but overall Dow Jones is more uh, stronger than the S&P 500, because Dow Jones actually indeed broke out into the new bull trend back here in November of last year. You can see a close above this blue line. But so far, we basically traded sideways like the rest of the stock market. So we'll see again what happens to S&P 500. Dow Jones pretty much should follow suit as well. NASDAQ is looking more promising. So notice downward facing arrow here last week, meaning that uh, technically it's a short signal to sell short last week. But so far, again, the follow through to the downside was not of any significance. And in fact, this week we rallied. NASDAQ actually outperformed the rest of the stock market this week. This pattern doesn't look too bad. I'm going to draw it in. So notice something like that. Looks sort of like an kind of like a cup. So if we get a breakout above this level, currently, I don't know, around here, I guess. I got, yeah, just like around the right around where we're trading right now. If we close above that level, well, there's the high from 2nd of February. If we close above the 2nd of February high, there's almost a guarantee that we will continue higher towards this blue line, which is currently at 13,474. Now, if that level gives and we break above it, that would mean that uh, stocks have now re-entered the bull market for sure. So, uh, very difficult time. I kept saying about this that we are going to have quite difficult time going into mid-April. So, again, we need to exercise patience. Looking at the Russell 2000 small caps index, by far the weakest of the bunch currently, even though it broke out where I'm hovering into the new bull market here on Wednesday, the 1st of February. Pretty much all of this move was given back, and now we're trading. Notice we're trading at the yellow line. We actually touched it right there on the 13th of March, this Monday, and it looks quite weak, to tell you the truth. So let's just hope that everything stops falling and we rally. Because if we lose small caps, then it's not a good sign. Because the small caps represent sort of like the economy, so to speak, of the United States. Looking at junk debt high yield bonds, symbol JNK. So junk debt represents junk debt. Why do I care about high yield bonds? Is because if we look, for example, on the weekly chart, we look at correlation coefficient. So down below here we have a yellow line, which is a yellow graph here, which means it's a correlation coefficient. And the more positive it is, the bigger the correlation is with the S&P 500. Occasionally we get a negative correlation like what we had here in November of last year. But by and large, junk debt, high yield bonds, and stocks move together, and it's good to uh, for them to be moving together. Now, currently, both junk debt and stocks are under pressure, understandably so, because again, the rating of high yield bonds are quite low. They basically approach stocks in in the quality of their uh, in the quality of the paper. Now, for high yield bonds, I think we might get a new retest of this red line, which is not a good sign at all. Because again, if we close below this red line, we could continue lower towards this yellow line, and then if we don't hold there, we could actually break to new lows, and in which case stocks most likely will collapse. Alternative scenario is we bottom around, well, for JNK it's 88.89 currently, 88.89, and then rally from there. Uh, Hopefully this will happen. But it's also possible that this whole entire breakout that I've been talking about for stocks into the new bull market may have been may be negated in the near term. Briefly looking at treasury bond yields, or just yields of various bonds, and at the same time, for example, mortgages have been coming down lately, and all kinds of loans like car loans have been coming down. um, this was also mentioned in the past few videos. So, for example, notice how this is a TYX 30-year Treasury bond yield. So, if bond yield goes higher, that means the bonds go lower. Now, notice that we have a reaffirmed resistance at around 4% for the 30-year Treasury bond yield, and moved down again. So we're currently around 3.5%. Importantly, um, we actually broke below this blue support resistance line. This would imply that, well, not so much imply, but there is a likelihood of interest rates to continue moving lower. So we'll see where this goes, but I think bonds. So we can look at TLT, Treasury Bond Fund (TLT). Notice that they seem to have bottomed. Began this bottoming process back in October. Had a couple of interesting, they came down towards this yellow line and then bounced off of them. So this has happened in early January, and yet again, this happened just very recently, a few days ago in early March. Now we're trading above this red line. Next up is if we see a move about the blue support resistance line, that means we're now in a new bull market for treasury bonds. In other words, interest rates of all sorts will likely come down. Now the bear market for treasury bonds began sometime in February of last year. Notice where I'm hovering. So a reversal right now, even though the interest rates are being controlled by Federal Reserve, and they're very scary, and they're saying that they will keep raising the interest rates until uh, inflation dies. I think the more important thing is to watch the Treasury bond price action and Treasury yield action as well. And it seems like interest rates are coming down. And let's look briefly at dollar versus gold, DXY. So dollar has reversed into a new downtrend, beginning here in January, 12th of January, where I'm hovering. Notice this close below this red line. That means it's now in a downtrend. A pullback was predicted. So where I'm clicking right now, you can see this line with circles on it. This was predicted. I drew it in back in late January, and it's pretty much followed this, lines pretty much to the T. How did I know about them? About this potential prediction is that notice what I just did is I turned on future projection of my indicators. You can see that they pretty much followed. See this light blue line versus this dark blue line, and so pretty much these lines have matched up, and the price action also followed this red line, continued higher. So uh, it seems that dollar has most likely topped. Maybe we'll get another move higher, but I don't know if how significant it will be. So In other words, right now we're having short signals. We're having signals to sell dollar short. By extension, if the dollar is being sold short or in a new downtrend, this is gold. Gold will benefit because gold is traded in dollars, where I'm hovering gold divided by US dollar. So if the bottom part of this equation, US dollar, is getting smaller, the upper part will continue higher. Indeed, this is what's happening. Beginning of a new uptrend for gold started here on Friday the 13th of January of this year, 2023. We moved a little bit higher. Again, where I'm clicking right now, you can see this line with like circles in it. This was my prediction of price action that I put in on the 27th of January. You can see I was a little bit off, but the shape of the curve is identical. So notice I said that we're going to drop and then we're going to rally into April. So we did drop. We just did. We're doing the same exact thing that I predicted, but by a few weeks early. You can see that we're actually broke out above this previous high that was set on Thursday, the 2nd of February. Very nice move. I'm gonna briefly show it to you on weekly time frame. So let me look at gold on the weekly time frame. So this is each candlestick is a whole week's worth of activity. Previous highs where I'm hovering was on 3rd of August 2020. Then the next high was on March in March 2022. And notice what's happening right now. We're approaching that level very rapidly. We can draw in this giant uh, cup and handle kind of pattern. You can kind of see it here. And I think if we break above previous highs, if we go to like 2000 for gold, I think at that point we can project a move significantly higher. Now, how high? So usually what we do is we measure the depth of this pattern. So in this case, it's a cup and handle kind of pattern. We can measure the depth of it, and it's about 21%. And then once the breakout occurs, we can see that the breakout, if it occurs, should take gold prices to about 2,500. How you know when that will happen is a good question, but it's reasonable to expect something like before the end of this year, possibly. So if you, for example, buy LEAP options like a year out on GLD on gold, then it's reasonable to expect that they come into money around $2,500 for gold. We are long gold. I am long one of the gold miners as well. And again, a very important topic. For some reason, people just love trading natural gas, although I don't recommend it. It's quite difficult. So natural gas was in a downtrend. You can see downward facing arrows. In fact, I sold it short myself back in December of last year. I got out a little too early, but I still made pretty good money here. Notice on this chart right there where I'm hovering between February 23rd and February 24th, there is a gap. Now, since we're at the bottom of the range, we made a low here and we rallied, and then we had a gap very close to the bottom. Okay, so there it is. I'm going to turn off the indicators for a little while. So there's that gap between 23rd and 24th of February. So we can say that this is a breakaway gap, provided that there's going to be a rally for natural gas. But breakaway gaps just means that we're at the bottom of the range and then we've gapped up. So we're breaking away from the previous, I don't know, base pattern, I guess, basing patterns. However, so far, we pulled back yet again, and today notice that this gap was closed. So, in a sense, it's a good thing to close all the gaps, but in a sense, it's also showing quite a bit of weakness for natural gas. So not really much I can say except for we might still retest this new lows. If this lows from February 22nd hold, February 22nd where I'm hovering, then maybe we're done falling. But other than that, I can't really say for sure. Head over to MasterChartsTrading.com, click on sign up for one of the products. I have two products and two packages. The trading indicators are these lines on the chart. You can use them to trade pretty much anything under the sun. Also, if you need my newsletter, so newsletters comes out every day, and then also on Friday I send out uh, a video that will cover many of the stocks that we trade. Notice this week we can see a lot of stocks were being covered and a lot of various securities like crude oil, some of the forex, Bitcoin, Ethereum, and some of the other stocks like Apple, Nvidia, some of the speculative ones like C3 AI, Fastly, Genius Sports, to you incorporated, etc., and as well as gold miners and other stocks. So if you're ready to sign up, head over to MasterChartsTrading.com and sign up for one of the products. Again, thank you for watching this video. If you have any questions, please send it in. Don't forget to hit the like button, subscribe to the channel, share this video. This is what keeps this channel going. Thank you for watching and have another great trading week. Bye bye.